Right. Good morning, friends. Good morning to you. Good morning, and how are you? All right. Okay, let's continue with our conversation in financial accounting. Yeah, we have started looking at the books of original entry or the books of prime entry. Right. We are looking at the books of what? Of prime entry, or the books of original entry. Okay, so when you hear about the books of original entry, what is it that comes in your mind? Okay, what comes in your mind when you hear the books of original entry? So there are those books that we usually call them the primary books sometimes, again, where we record the information of the transactions immediately they occur. We record the information about the transactions immediately they occur. All right. So the first book that we want to consider is called the Pet, okay? The Pet Cash Book. The Pet what? The Pet Cash Book. The Pet Cash Book is one of the books of original entries that we have, okay? Is one of the first books of original entry that we do have. What do we record in the Pet Cash Book? This is the book where we record, okay, where we record small, or the transactions that involve small amounts of money, So for example, you are a company that is dealing in millions, okay? Most of the transactions are in millions. And then you happen to want to buy maybe a pen or something, okay? Yeah, that could just maybe cost $1, or yeah, something that is a bit cheaper. You're dealing with a lot of dollars, and then you have to find yourself spending just a very small amount of money. It would not be smart for you as an accountant to record all these other transactions in your books, and then you happen to record also some transactions that involve very small amount of money within the same book. It is not very smart for you. So for that reason, it is very important, okay? It is extremely important that you find time, okay? You find time to do what? To categorize these transactions according to the magnitude. So the very big transactions that involve a lot of money, we record them in what is known as the cash book. Okay, there is what we call the cash book, and we'll talk about the cash book very soon. But as for now, we are concentrating on the transactions that involve small amounts. Maybe the question should be, who determines what small amount is? Okay, what criteria do we use for us to say, okay, this amount is what? It's a small amount. Okay, so what determines, or who determines? This is a company. The company itself can determine that, okay, guys, all the transactions that are maybe less than $100 will make them to, or they will record them in the Pet Cash Book, right? They will be regarded as small transactions. If that agreement has occurred, then it simply means that those transactions will not be put in the big cash book, okay? The transactions will not be put in the big cash book, but they will be put in this small cash book that really involves small amounts of what? Of money. So now, about the Pet Cash Book, what is the general format of the Pet Cash Book? So with the general format of the pet cash book, it follows the following format. And you have to pay attention to the format. This is the format that I am showing you now. I even give you an example at the end of it all. So these are total received. The total receipts, whenever you receive the money, you record this side, then there is a date in between, the date, okay? Then from the date, you have the details. And from the details, you have the analysis column for the totals, total paid. Here you record the total amounts paid this side, okay? Here you record their total amounts paid. And then there is an analysis column. This is what we call analysis column. When you are making payments, okay, you are paying for what? The expenses that we're incurring are grouped, okay? There are several groups. So it's very important that you read out the question and see how you would categorize those small amounts into some specific expenses. So for example, you could have analysis for office expenses. If that small expense is incurred related to office, you record travel, it is related to travel. You can have another column, maybe it goes in the ledger accounts, okay, the ledger accounts. So you can have a lot of columns, these that I've written in blue, okay? You can still have more of columns depending on the question that you have been given. So it's very extremely important that you read out the question. When you read the question, you understand the question. And once you understand the question, then you can start answering the question. So let's go to an example. I want you to go straight to an example and see what I am trying to talk about or what I'm talking about. This is a past paper examination of 2023, just last year, May, June. This is the question that your friends or your colleagues wrote. 2023, question number 1. This is an exam question. As you have seen, this is a screen, and this is Cambridge IGCSE. So these are not self-made questions. Yeah, these are questions that you expect also to find in an exam. And let's read out the question. It says, Shavan maintains a pet cash book using the imprest system. So the imprest amount, which is 200, is restored every Wednesday. So every Wednesday, there is an amount of 200 that is restored. So what this simply means that the senior accountant always gives or dedicates a 200 to the junior accountant to meet these small transactions. Okay, so the small cash cashier, the cash cashier who deal with these small transactions will be given this amount of money every Wednesday. Now, one thing that is interesting about this 200 is that this imprest amount is that it can never go beyond this amount. So which simply means you cannot receive the 200 before you finish the 200. It could come in an instance whereby maybe you've remained with $20 and the transaction that you want to meet is 30. So you will have to replenish, to go and ask for some more money so that it can be equal to the imprest amount. So that means that if you just have in your account only $20 out of 200, you will not receive the 200 when you go to replenish the account, but you just receive 180. So that when you add 180 plus that 200, you have the total of 200. Okay, you have the total of 200. So now let's read out the question and continue. All payments of less than 75 are made from pet cash book. So here, according to this standard, everything less than 75 is made from the pet cash book. And all cash receipts of less than 75 are paid into the pet cash book. So all the transactions less than 75 less than $75. Now, this is what it says. On 1st March of 2023, he had $61 in his pet cash book. Okay. He provided the following information for the first week in March 2023. So the opening balance, okay, the amount that he started with was 61. That is the amount brought down. So they started with 61. They never had the whole 200. So what that simply means is that they have to spend the 61. Okay. This is the 61 that they received. But you see, this is 61 amount is less than what? 200. So we got to replenish the account. We got to replenish the account. Okay. So let's start writing down and answering the question, because the question is saying, can you prepare the pet cash book for the first week of March and you balance of the pet cash book? Let's start preparing the pet cash book. Okay, so this is what we have. You can even label it petty cash book. So the first day, which is 1st March, you had a balance brought down from the previous period of 61. And he said that you needed to receive on the amount the very day from the bank to make sure that the amount that you have is equal to what? To 200. So you receive the balance of 139 through the bank so that you can now have 200 and then you start spending. Okay, so let's see what happened. On 1, we restored the pet cash interest from the bank using the bank. Okay, so which simply means on 1, first day, they received the amount to make it 200. That is what it means to restore. Then number 2, on 2, we paid 55 to GILS a trade payables, 55. So this is a payment, okay? It's a payment on the 2nd of March. 2nd of March, we paid, okay? This is 1 March. Now, 2nd of March, we paid to who? To GILS. And the amount that we paid is 50 what? 55. Then the analysis of this column, it is a payable, so it goes in the ledger's account. So you put it in the last column again. This is the analysis of this. You put in the last column, the amount again, the 55. Why are you putting it? You are trying to analyze the expenditure, like where, like it belonged to, you know, to which, like why did you incur that, you know, expenditure? On the 3rd, you paid tax fare, $21. Okay, we paid the tax fare on the 3rd, taxi fare. So when you look at tax, it belongs under which part of the expenses? We have office expenses, travel expenses, and ledger accounts. So the tax pay of 21, really, this belongs to, it does belong to the travel. This expense was incurred because of traveling. Then on the 6th, we are told that there was a payment of some notepad. We paid $18 for notes and pens. $18. So we were paying for notepad, for a notepad and pens. Okay, $18. What category of expenses would we put this one? Obviously, we know that the pens, the notepads, they fall under office expenses. So we'll record this 18 in this very column again. And then on the very 6th, okay, the same 6, what happened on the 6th? We are told that we restored the cash, 25. Okay, we received the cash, $25 from Michelle, a trade receivable. So it was a receipt. So we had a receipt. This is a receivable of what? 25 from Michelle. So you write 25, a receivable. And a receivable, we know always that it goes where? It goes in the ledger, right? It goes in the what? In the ledger. Yeah, so you record the 25 like that. After we have recorded our 25, because it's not an expense anyways. The expenses are the ones where we now, have to show where they go, like which category. This one is a receipt. And then on the 7th, we are told that we incurred the cleaning expenses. Now, cleaning expenses, where would it go? Okay, it is of 30. It goes under office what? Expenses. Because what were we cleaning? Okay, we were cleaning the office. We were cleaning the what? The office. We were cleaning the office. Right. So when we reach here now, we can easily balance off the what? The account, because the question says you have to balance off the account. And how do we balance off the account? Look here and pay attention nicely. So this is how you balance off the account, right? This is how you balance off the account. You have to, when you're balancing off the account, you have to add all the columns. Add all the what? All the columns. The total paid was 124. It's totaling up to 124. Then we can add all these other columns. 18 plus 30 gives us 48. Then we have 21 here and 55 here. Okay, we add all the columns downwards. Then after adding these columns, then we can now add both sides. We have to add also on the total receipts side. The total receipts are equal to 225. 225. So we'll record the 225 both sides. 225 is being recorded on both sides, right? Okay. Yeah, so the 225 is being recorded on both sides. Then after recording on both sides, you have to balance off the account. Obviously, you balance off the account. And from what we said about how to balance off the account, you deduct the amount, this one that is higher. Okay, you deduct the higher amount, the higher amount, the smaller amount, the 124 from the big amount. So you say 225 minus 124, then this will be the balance carried down, and it is 101. Then the same amount will be written as the balance brought down on the other side, on the opposite side. Okay, with the date of the next week, which is day number 8, that will be 8th of March, and you record it on the opposite side. So this is basically how you balance off the pet cash book. And this is what you were expected of doing.